Were you worried about titling it this way, or tell us what you mean by titling it that?
Well, people in this country are fed up with the level of taxation. They pay income tax, they pay capital gains tax, they pay alternative minimum tax, they pay intangibles tax, sales tax, real estate tax. I could go on. And when they die, they can't believe that now Uncle Sam's going to step in and take 55% more of what they have left. And so I wrote a book to show people that there are legal ways, legitimate ways that they can truly disinherit the IRS.
Yeah, and nobody really...
From the studios of WLRN Public Television in South Florida, this is the national award-winning Business Exchange. Welcome to the Business Exchange. In today's Money segment, Michael Kilbourn, author of Disinherit the IRS, will tell you how to preserve your wealth and pass it on to your good-for-nothing heirs, whether the IRS likes it or not.
The truth is, the biggest villain in estate planning is not the IRS, it's procrastination.
So the IRS is just doing its job, and unless people do their job, hey, the IRS gets to, rake it all in.
Sure, estate taxes are largely optional if people take the time.
They're optional.
If they take the time to learn how to avoid paying them.
Well, still ahead on the Money Cast, taxes are, of course, unavoidable, but we do have some tips to make tax time maybe a little less painful.
That is right. Our next guest, Michael Kilbourn, will explain. You won't want to miss it. Keep it here on Bloomberg.
Guest is Michael Kilbourn. Michael, good morning. Good to see you.
Good morning.
We're talking about estate planning, which ranks right up there, I think, with most people, right in there with root canal.
Well, indeed. In fact, most people think of estate planning as death planning, and truly, if you do it right, it's living planning. And in my book, Disinherit the IRS, I show people how to make it a living plan.
It's tough, though. I think a lot of people avoid it because they think it's so complicated. I know when my husband and I sat down to do our will, I just thought, first of all, we don't have that, at this point in life, why are we so worried about it? And it turned out to be a very complicated endeavor.
Well, the truth is, if it's done by a professional, it can be made simple. We can devise a plan that is really quite simple and leaves you in control of your estate for your entire life.
What are some of the biggest mistakes people make when they sit down to make an estate plan?
Well, one of them, of course, is not having any plan at all, not having a simple will or trust to map out what they really want to do.
Which is pretty common.
And last year, over 70% of the Americans in this country who died did so without a will or a trust or anything. In fact, they had no plan. And a surprising large number of those were college-educated Americans. The truth is that there are two tax systems in this country. Now, I don't mean one for the rich and one for the poor. I mean one for the informed and one for the uninformed. And in Disinherit the IRS, I try and show people how to legally disinherit the IRS.
And you do it primarily through the use of trusts.
Trusts are one. We have things like family limited partnerships that will help you remain in control of your assets for your entire life.
I wanted to ask you, but when you're dealing with a trust or a limited partnership, how much control do you really have to give up and still satisfy the IRS requirements?
Well, with proper planning, we can set it so that you give up no control. How's that with a family limited partnership? But we might want to set up a trust where you would be the grantor and your spouse would be possibly the trustee of that trust and an income beneficiary. So now you've taken assets out of your estate, and yet you have access through your spouse, a little incentive to stay together if you're married, and basically your spouse can get to the assets if they're needed, and if not, they continue to grow for the benefit of your children. But they're out of your estate, and you have control through a spouse, and that's using trusts. But if we use a family limited partnership, you and your spouse can be the general partners as to 1%, give away over time 99% of the limited partnership shares to family members, and you end up in control even with 1%.
The real devil here is the procrastinator.
Well, that's true. In fact, the biggest villain in estate planning is not the IRS, it's procrastination.
The elevator pitch on why I can't just give what I want to whom I want. What are the roadblocks?
Well, you've got all the taxes you pay during your life: sales tax, income tax, capital gains tax,
right.
You name it, and then you die, and Uncle Sam wants to take right now 49% of what you have left over the certain exemption amount.
Right. And what is that exemption?
There's a one-time exemption of $1 million per grantor. So if you're married, that's $2 million.
Right.
And that's just one time. You can wait till you die. You can chip away at it while you're alive. You can give it all at once while you're alive. And then there's the $11,000 per year exemption that you can give to anybody. If you're married, it's $22,000.
What's the threshold then at which you're not